Good morning and welcome to another episode of Crypto Daily. Today we're diving into the latest market trends and I'm excited to be joined by my co-hosts. We've got a lot to unpack from the Trump memecoin frenzy to the flat crypto market cap. Let's get started.
Yeah, it's been an interesting week. The Trump memecoin has been drawing a lot of attention, but as we'll discuss, it doesn't seem to be bringing in fresh investment to the market. We spoke to Garrison Yang from Mirai Labs, who shared his insights on the current state of the market.
That's right. The Trump token has seen a meteoric rise, reaching a value of billions of dollars in just a week. But what's striking is that the total crypto market cap remains relatively flat, hovering around $3.5 trillion. This suggests that the memecoin's popularity isn't necessarily translating to new investors entering the market.
Exactly. Garrison Yang pointed out that the hot ball of money is essentially being moved around, with little to no new investment coming in. This raises questions about the sustainability of the current market trend and whether we can expect any significant growth in the near future.
Now, it's worth noting that the Trump token's success has brought considerable attention to the crypto market. However, as we've seen in the past, attention alone doesn't necessarily lead to substantial growth. We've got to look at the underlying fundamentals and see if there's any real substance behind the hype.
Absolutely, and that's what we'll be exploring throughout this episode. We'll be diving into the specifics of the Trump memecoin as well as the broader market trends. We'll also be discussing what this means for investors and whether there are any opportunities or risks to be aware of.
One of the key themes we'll be exploring is the idea that the crypto market is still largely driven by sentiment and speculation. We've seen time and time again how a single event or announcement can send shockwaves through the market, only to have things settle back down shortly after.
Yeah, and that's exactly what we're seeing with the Trump memecoin. The initial excitement has worn off, and now we're left with a market that's essentially back to where it was before. It's a reminder that, as investors, we need to stay focused on the long-term trends and not get caught up in the short-term hype.
Well, we've got a lot more to discuss on this topic, and we'll be bringing in some expert analysis to help break it down. But for now, let's take a closer look at the numbers and see what they're telling us about the current state of the market.
Building on what we discussed earlier about the increasing adoption of Bitcoin among institutional investors, I think it's interesting to take a look at the publicly traded companies that have taken the plunge and invested in the top cryptocurrency.
Absolutely. And it's amazing to see how far we've come from the days when Bitcoin was considered too volatile for serious businesses to touch. I mean, we've got some major players now holding significant amounts of Bitcoin in their reserves.
That's right. According to a recent report, the top 10 public companies with the biggest Bitcoin portfolios are holding a combined total of over 200,000 Bitcoins. And it's not just tech companies either. We're seeing a diverse range of industries represented on this list.
And it's worth noting that MicroStrategy was really the first major company to break the taboo on buying Bitcoin. They purchased $425 million worth of Bitcoin back in 2020. And since then, the floodgates have opened.
Exactly. And now we're seeing companies like Tesla, Square, and even Marathon Digital Holdings, which is a digital asset technology company, getting in on the action. It's clear that these companies see the potential for Bitcoin to appreciate in value over time.
Not to mention the potential for it to act as a hedge against inflation and market volatility. I mean, we've seen some pretty wild swings in the markets over the past few years, and having a portion of your reserves in Bitcoin can help to mitigate some of that risk.
That's a great point. And it's also worth noting that these companies are not just buying and holding Bitcoin, they're also exploring ways to use it in their operations. For example, Tesla has started accepting Bitcoin as payment for some of its products.
Yeah, and that's where things get really interesting. As more companies start to integrate Bitcoin into their operations, we're going to see a lot more mainstream adoption. And who knows, maybe one day we'll see Bitcoin being used as a standard form of payment across a wide range of industries.
Definitely something to keep an eye on. And in related news, we're seeing more and more institutional investors getting into the crypto space. What are your thoughts on the implications of this trend?
Well, I think it's clear that institutional investors are taking a long-term view on crypto. They're not just looking to make a quick profit, they're investing in the underlying technology and the potential for it to disrupt traditional industries.
That's right. And as more institutional investors get into the space, we're going to see a lot more liquidity and stability in the markets, which in turn is going to make it easier for individual investors to get involved.
Exactly. It's a snowball effect, and it's going to be interesting to see where it takes us.
I think our previous discussion on the impact of tech giants on the crypto space really sets the stage for our next topic. We talked about how innovation from outside the crypto world can sometimes leave blockchain-based projects playing catch-up.
Absolutely. And I think we're seeing that play out right now with the rise of DeepSeek, the new AI model out of China that's turning heads. It's reportedly able to compete with the likes of OpenAI, but at a fraction of the cost.
That's right. And what's really interesting here is the impact this is having on AI tokens. These are projects that have raised millions, sometimes billions of dollars in funding, but are now seeing their market caps take a hit as a result of DeepSeek's disruption.
Yeah, it's like they're getting punched in the gut. I mean, these AI tokens were supposed to be the future of artificial intelligence, but it turns out that a lean, efficient team from China can come in and do it better, faster, and cheaper.
Ouch. And I think this really highlights the problem with the way some of these AI tokens have been structured. They're often more focused on raising capital than actually building a working product. And when someone comes along and shows them up, it's clear that the emperor has no clothes.
Exactly. I mean, we've seen this time and time again in the crypto space. Projects that are all hype and no substance eventually get found out. And it's the investors who are left holding the bag.
So what does this mean for the future of AI tokens? Are they doomed to fail, or is there still a place for them in the market?
Well, I think it's clear that the sector is going to have to undergo a bit of a shakeout, but that doesn't mean that all AI tokens are created equal. There are still some projects out there that are doing interesting work and have real potential for growth.
Okay, so it's not all doom and gloom, but for investors who are looking to get into the AI token space, what advice would you give them?
I would say do your research and don't just look at the market cap or the hype surrounding a project. Look at the actual tech and see if it's something that has real world applications. And always be cautious of projects that seem too good to be true.
Sound advice. And finally, what do you think this means for the broader crypto market? Are we going to see a ripple effect from the decline of AI tokens?
Well, I think it's possible that we could see a bit of a contagion effect, especially if investors start to get spooked. But at the same time, I think this could also be a healthy correction for the market. It's a reminder that at the end of the day, it's the tech that matters, not just the hype or the marketing.
We've been discussing quite a few major updates in the crypto space today, but I think it's time to take a step back and look at some of the more lighthearted developments. Crypto games have been on the rise, and we've got a few interesting stories to share.
That's right. If you're a fan of Telegram, you're in luck. TON is now exclusive to the platform, which is a huge move for the company. But what really caught my eye was the new betting option with Trump. Rivalry has announced that you can now deposit and play with the currency.
And to make things even more interesting, every bet made with Trump between now and February 1st will earn 20 times the NewsBuy Rivalry rewards. It's clear they're trying to make a big splash with this new partnership.
Definitely. And speaking of making a splash, Ronin has just launched its meme coin feature, Tama Meme. Users can now create their own meme coins in just a few clicks and even use referral codes for extra rewards.
I love how these platforms are embracing the more playful side of crypto. It's a great way to bring in new users and make the space feel more approachable. But at the same time, we need to remember that these are still investments and should be treated as such.
Absolutely. We've seen time and time again how quickly the crypto market can shift. So while it's okay to have fun with these new developments, it's crucial to keep a level head and do your research.
That's why we always stress the importance of education and critical thinking in the crypto space. It's not just about jumping on the latest trend, it's about understanding the underlying technology and the potential risks and rewards.
Well said. As we wrap up today's show, I think it's clear that the crypto space is still full of surprises. From the rise of crypto games to the ongoing developments in the metaverse, there's always something new to explore.
And that's what makes it so exciting. As we head into the rest of the week, keep an eye on these emerging trends and remember to stay informed. We'll be back tomorrow with more updates and analysis.
And don't forget to follow us on social media for the latest news and updates. Thanks for tuning in, and we'll catch you all in the next episode.
Until then, stay crypto curious.
And keep on hodling.